So good morning, everybody. It's Neil Foley from the Business Growth Club here again. Really fortunate this morning to have Henry Audley Charles with us today, who is the principal of SME Finance. How are you then, Henry?
I'm good, thanks, Neil. Yeah, how are you doing today?
Yeah, very well, thank you. I'm looking forward to this recording. What we'll hope to show you over the next 30 minutes or so is what are the different aspects of finance that you can access. When should you use them? When should you be thinking of them? Because we tend to think of finance as being sort of mortgages or loans, but there's a lot more to commercial finance than that, isn't there?
There's a lot more than that.
Yeah. So, well, hopefully it'll be an interesting and informal discussion. That's something that you'll think, actually, I could, you'll know more at the end of it than you did at the beginning. That's the objective anyway.
Perfect.
So let's kick off then, Henry, with what are the different types of commercial finance that are around?
Well, if you go back historically, you'd go to the bank for finance and the bank manager would advise you on the most appropriate product for the business's needs at that point. Mm-hmm. Those days have changed and most small businesses now no longer have direct access to a bank relationship manager.
Yep.
So they will go to the bank via a call centre and quite often they won't get through to the right product partner and the advice won't be available because the bank person doesn't have the experience that they used to have. So it's now a case of they apply for some finance and it doesn't tick all the boxes for the bank, and so the bank says no.
So is it a classic sort of computer says no?
Very much so. At the smaller end of the market, absolutely.
Right.
And in that situation, that's when finance brokers can help, and they can help steer the clients towards the options that might be available, help them choose the right lender and the right product.
Okay. And I suppose I've been involved in business for most of my life. The bit that I don't understand with that is how did the banks come to this decision to say that that's a sensible move to remove this personal contact? Because at the end of the day, they can sell you a loan or something at a decent rate, a decent return. Yeah. So how did that mindset come about?
I think it came from cost cutting.
Okay.
Bank staff are expensive.
Yep. And
in order to cut the costs, the world changed fairly quickly and the alternative finance world sprung up from pretty much nowhere.
Did it?
Yeah, and it's taken a lot of business from the mainstream banks. And because of that, their income has dropped off, the costs have increased, and they've had to do something. And reducing staff numbers was the obvious choice, increasing the use of technology, and unfortunately it's had a detrimental effect on small businesses.
Yeah. Doesn't make any sense, does it? Because you're right, I suppose years ago there would have been the Lombards of this world or Mercantile Credit linked to Barclays or whatever. But there wasn't a lot else, was there?
Very little. It was just the primary banks.
Yeah.
And they did pretty much everything.
So they managed to screw that up as well. Yeah, good going.
Harsh, but fair.
Yeah. So if you're a small business owner, so there's asset finance. Now,
Yes.
Do you want to talk a bit about asset finance and how that works?
Yeah, asset finance is a very simple way that a business can fund the purchase of an asset, whether it's a printing press, whether it's a car, whether it's a printer, whether it's software. Mm-hmm. Most assets that are used by the business can be financed in one form or another.
So you can even finance software?
Software purchases can now be financed, yeah.
Right, crikey. So, because I tend to think of an asset as being a physical thing that at least you can gain security over. Is that the principle behind it?
Yeah, that would have been a hard asset. It's classed as a hard asset when it's something you can actually physically pick up and use.
Yep.
But the soft assets, such as office refurbishments and software, can now be financed by some of the more specialist lenders.
Right, crikey. So, asset finance being one, and I know you've had your working career has been in finance. What about factoring? And factoring is sometimes had a bad press, but how does factoring work?
Well, factoring and invoice finance, invoice finance is a generic term. You've got factoring and invoice discounting are the two principal products.
Okay.
And that's where the business would sell its invoices to the factor or discounter, and they receive an advance against the unpaid invoices. And that basically provides a cash flow injection on day one to the business that they can then use instead of an overdraft, which is now much harder to source, to provide the working capital for the business. It effectively allows them to overtrade and they can keep selling their product or providing their service without worrying about collecting the cash.
And in terms of, am I right in saying that you actually haven't absolved so if I factor my invoices, I haven't absolved myself of the responsibility of what happens if they don't actually get paid?
You can do.
Can you?
Some of the factors will provide a credit insurance product or a protection product that basically makes them responsible for the credit risk. So if the debtor doesn't pay, then the factor will lose the money, not the client.
And does that happen often in terms of that people taking this insurance, or is it expensive?
It's not that expensive, but it depends on the client, their risk profile, their strategy, and what they're looking to achieve.
Right.
That particular product is protracted default,
Yeah.
which is a bolt-on product to some of the credit insurance policies.
Right, okay. Because otherwise, if the debt isn't paid, then the reality is the factoring company is going to come back to me and say, I'm sorry,
Absolutely.
but this one wasn't paid,
absolutely.
therefore we want our money.
Yes, I'll have recourse back to the client to get their money back.
Okay. Historically, I think, would I be right in saying, Henry, that factoring has been seen as a bit of a slippery slope in terms of a business is, if you were aware they were factoring, you would be possibly more cautious, thinking,
Yeah, if you go back 20 years or so, if you were factoring, you were in trouble. That was the general perception.
Yeah.
And some of the factors didn't work as ethically as they should have done, and they helped confirm those sort of fears, and that's a real shame. But
you think it's moved on now?
Factoring and invoice finance has moved on a lot since then.
Okay.
And it's much like having a child. If you plan for the child and look after the child, you'll end up with a nice child.
Yeah.
Whereas if you leave it to its own devices, you'll have a nightmare. And invoice finance is exactly the same thing. If you manage it and use it correctly, it will work like a dream as long as the business is growing or it's plateauing. If a business goes into decline, then invoice finance will cause a whole suite of problems.
Right, okay. So let's assume my business is plateaued or growing. When you say manage correctly, what do you mean by that?
Well, as long as the money is used to pay suppliers and as working capital, it'll be absolutely fine.
Okay.
If the money is stripped out to be used for a fixed asset purchase or a dividend, then yes, it will cause problems unless the cash flow can afford a lump being taken away from it.
Do the factoring companies look at what you're going to use the money for, or are they not bothered? They don't.
They leave the business to its own devices. They provide the cash with almost no responsibility.
Really?
Yep.
Okay. So people do need to be sensible with it.
They need to be sensible with it, and if they're unsure, speak to their accountant. Get a cash flow forecast drawn up to see if a lump can come out. And if it can, then that lump can be used for other purposes.
Okay.
But it must be in a controlled way, or it should be in a controlled way.
Yeah, no, that makes sense, doesn't it? And how do you ever get off factoring then? So you've had this one-off, well, not necessarily one-off, because they're going to buy your whole book, presumably.
Usually it's the whole book, yeah.
So you get this injection of cash.
Yes.
How do you ever wean yourself off it?
Well, it has been described as heroin, and weaning yourself off is an interesting term. You can, if the strategy is to come off it, then you wind the facility down by reducing the prepayment by 5% every week or every month, depending on what the cash flow can afford.
Yeah.
But ultimately, if the business is making enough of a margin and it can afford the fees, then it isn't really a problem.
Okay.
It's no different to having an overdraft facility.
Yep.
You still need to have a form of finance to provide the working capital.
Yep. And these facilities that people set up with factoring, can you do single invoice factoring?
Single invoice finance is now available,
Okay.
As is selective invoice finance. So
as long as you're not selecting against the factor, saying the factoring company by thinking this is an invoice that isn't going to get paid, or I'm worried.
That wouldn't help. That wouldn't help anyone.
No.
You'd normally only factor good debts, and there are several different platforms and financiers who will look at the odd invoice here and there, or just a few invoices for one debtor on a irregular basis. But they are different to the mainstream factors.
Okay. Because that could be a really useful facility, couldn't it?
It's a really good form of finance. It's more expensive, but it is a solution that works for some businesses.
Yeah.
So once I understand the business's requirements, I can make a suggestion with what might work for them.
And how expensive is factoring then?
It's not that expensive.
Okay.
It's more expensive than overdraft because there are additional fees and different structures, but it will provide more cash. Mm-hmm. It's a form of working capital that will work for many businesses.
And, I mean, nobody likes overdrafts, do they? And I think what I sometimes find surprising is a number of businesses don't realise that overdrafts, of course, recalled on demand. One, they're an annual contract, they tend to be, but actually even over and above that, if the bank gets twitchy, then actually they can call it in.
Most finance facilities are on demand.
they?
Invoice finance, particularly, yes, can be cancelled in a
Right.
heartbeat, but only if there's a fundamental problem.
Right.
If the business is working well and it's happy and the factor are happy, the facility will roll pretty much until one party gives the other party notice.
And if the factoring gets pulled and they say, actually, we've decided to remove the facility, does it just wind down, or can they then say, actually, we want our money?
It depends on the reason why they want to end the contract. If the factor has had a problem, they may say we want our money back within 3 months.
Yep.
And in which case, then the client has to repay the full facility.
Yep.
Or move to another factor, which would be the usual route.
Yep.
There are factors who take different levels of risk.
Yep.
And I had a client who their facility was terminated by the bank. There was an incident that didn't go perhaps as well as it should have done, and the client made some decisions that were not the best things that they could have done, I think it's fair to say. And there was an allegation of fraud.
Right.
It turned out that it wasn't fraud, it was a misuse of the facility. So I was then tasked with finding another factor for that particular client. And because the fraud word had been mentioned, it was much more difficult to place.
Sure.
But it was placed with a tier 3 funder who charged a lot more, but they provided the working capital.
Right.
The client then spent a year with them and then went back to a mainstream bank after that.
Right, okay. So you need a history, if you like. And is that where, because are people using sort of cloud-based accounting systems more now, so that it's easy for a factor to look at a business accounts and get a very clear picture quite quickly, can't they, of the state of play?
Yeah, cloud accounting systems are far more common now.
Yeah.
But it doesn't really matter the factor whether it's a cloud-based system or an old-fashioned system. So whether it's Sage or one of the other major packages, that's perfectly acceptable.
Okay. I've heard it said that with factoring or invoice discounting, that it can be used for management buyouts. It can be, so it's not just about cash flow.
No, it's
it
not.
can be about all sorts of different things.
If used correctly, that's an ideal use of it. If a business has a target acquisition in mind, they can use the debtor book of the target as well as their own to help effect the purchase.
Oh, so actually the company they're purchasing.
Very much so. As long as there are forecasts that show the deal works and there's enough cash left in the pot to provide the ongoing working capital.
So is that one of the ways and one of the routes that people buy businesses without using their own money?
That's one of the ways it has been done, yes.
Really?
Yep.
Because I've seen there's various companies that I see online, etc., who talk about buying it and using other people's money.
Yep.
I hadn't quite realised that's how they would do it.
Yeah, quite often the vendor, if they take some deferred consideration, which means that the purchase is smeared over a time period and they're then paid off on an ongoing basis, that then means that the purchaser doesn't always need to have their own cash available to effect the purchase.
Because cash flow, of course, is the most important thing in business
Very
all
much
the time,
so.
isn't it?
Most businesses will fail because of lack of cash. And that's one way of preventing it from happening.
So what happens then in terms of when people approach you, Henry, when they say, actually, they've probably been to their bank as probably the first port of call that most people should do, isn't it?
And it definitely should be, yes.
Because it's cheaper, I guess. But then they come to you and say, I've got a temporary problem. So they're either doing an acquisition potentially or they've got a temporary problem. What process do you go through?
An initial discussion with the client to establish their needs, their requirements, and what security might be available if it were required. And then it's a case of finding the right solution for them. So discuss the options with the client. Then we decide that what is the right solution they want to go for, and I will then search for 2 or 3 different quotes for that particular form of finance from different providers.
Because there's so many providers out there, aren't there? I mean, I think that in terms of the challenger banks, I know you work with a number of the challengers. You just think, how can there be enough business for it all to go round? You've got the big banks, and then you've got 25, 26 challenger banks,
Something like that.
None of which make any money.
No, they don't.
And you think, how's this going to work? Well, how do you think that's all going to end?
There's going to be some amalgamation and consolidation. That's certainly the case. The mainstream banks are losing clients to the challengers and the alternative finance world.
Because they're starting to they're all nibbling around the edges, are they?
Very much so. If you look at the funding circle, that came in from nowhere, and they're writing millions of pounds of loans pretty much every week. And those are deals that in the old days would have gone to the banks.
Yeah, no, that's true, isn't it? Do you worry about the lack of regulation in some of this?
We do need more regulation, but it needs to be managed and it needs to be controlled.
Yeah.
Even with regulation, there are a lot of forms of finance are still unregulated. So you can have unscrupulous lenders and unscrupulous brokers who will operate within the regulatory framework, but still not make the right decisions for the client for the right reasons.
I suppose we've seen that with RBS and HBOS at a much bigger level, haven't we?
At the moment, I'm trying to unpick a deal where a client had a £200,000 loan that was arranged via another broker, and they told the client that the only solution was with this one particular lender who put the finance in place with a 5% arrangement fee and and they're charging them over 2.5% a month on a 12-month loan.
A month?
Yes.
Crikey.
And they were told that's the only solution available to the client, and that's not the case. And I'm now trying to unpick that and find the right solution for them at less than half the cost and over a longer period of time, so the payments are actually affordable and sensible.
Yeah. I mean, it's one of those classics, isn't it? I would think whether the commission or whatever has driven the deal, but also, repaying that over a 12-month period of that sort of rates is going to hurt, isn't it?
Oh, it was an enormous monthly payment
Yeah.
that they could just about afford,
Yeah.
but it didn't allow any wiggle room.
No.
And when finance is arranged, there should always be wiggle room to make sure that if things don't go as well as planned, the client can still survive.
Yeah. What's available if you're a business and you suddenly, because sometimes what causes problems, as I see, is you get a big deal come along or a bigger client suddenly coming along, and you need to finance the purchase of the goods, etc. What sort of finance is available for that?
There's purchase order finance.
And how does that work then?
There are different lenders who can provide that sort of finance, and a couple of the lenders they will get an insured credit limit on their client. And they'll then lend up to that limit.
Right.
And those lenders don't normally take any personal guarantees from the client.
Don't they?
No. So then the client has the money available to draw down almost like an overdraft facility.
Yeah.
Or they can then use the invoice from their supplier and get finance on that for another 3 months, as long as the invoice is still current.
Okay. So there's loads of
loads of different ways of doing
options,
things.
aren't
Very
there?
much so.
And in some ways, that's probably better than the old days where you went to the bank because they were they were either going to give you an overdraft or give you a loan.
In the old days, the overdraft was the primary form of business finance apart from a loan.
Yeah.
And it was relatively cheap money.
Yeah.
Now, it's all risk-based pricing, and the client will pay a fee based on the risk that they present to the financier and the risk of the transaction.
And if you were a business and just needed cash flow, what are the options open to you then? Because you just, for whatever reason, maybe you've lost a client or made a miscalculation or things haven't quite worked the way you want. What options are available in terms of just helping you with cash flow?
If it's cash flow, then normally invoice finance would be the right solution for that.
Okay.
There is a lender who has a hybrid product that's a cross between invoice finance and overdraft.
Yep.
And that's a really interesting model. It's sensibly priced.
Yep.
It's risk-based again.
Yep.
And there's almost no admin for it. So you've got all the benefits of invoice finance without any of the administration burden.
And when you say there's one lender that's doing that, how come the others haven't followed suit?
Can't answer that.
No, it's odd, isn't it?
It's an innovative lender, and the product's been out for a couple of years. It's been well received, and their clients are very happy.
And was this one of the challengers, the challenger banks?
It's not a challenger bank,
really.
No. It's almost a fintech business.
Okay.
It's got some serious backers behind it, who are experienced in other markets and have now moved into financial services.
Right, crikey. It's nice to see innovation coming into the market, isn't it?
It's long overdue.
Yeah. I know in terms of talking to some of the challenger banks, when you realise that the cash burn that they have is huge, isn't it?
It's enormous.
Even though they're all internet-based or mobile-based accounts, nobody's doing anything other than that. I suppose Metro, you might say, is still a challenge. But other than that, they're all... And yet they've still got 200 staff or 250 staff. The IT expense is colossal, isn't it?
It's huge.
And you just think, you sort of scratch your head in wonder at this, really, and think, I can't. I know you say mergers and acquisitions, but how any of them ever think they're going to make money, I can't imagine.
I guess it's the cost of acquisition of the client is a lot lower.
Yeah.
They don't have the overhead burden that the other banks have, and it's the longer term gain. Build the client base, provide the right solutions at the right price, and they will grow organically.
But what are they going to flog us? So current accounts don't cost any money, which I know free banking is subsidised by people who go into the overdrafts and the rest of it. But nobody willingly will pay for current accounts or whatever. So what is it? Credit cards?
Well, the
loans?
Well, the new challenger banks aren't offering current accounts.
No. Don't they?
No, not yet. I think there's one that does.
Oh, okay.
There's a couple that are credit card based.
Yeah.
With some fairly clever bells and whistles.
Yeah.
But the actual old-fashioned current account is a lost leader, as you said. So they're avoiding it like the plague.
And in some ways, from an ethical viewpoint, they should probably not exist, should they? Because there isn't free banking, because there is nothing free.
True.
But it's being cross-subsidised by people who can't afford free banking or in a poorer account or go overdrawn and get hammered for fees. So in some ways, it's not particularly ethical, is it?
It's a different business model.
Yeah.
They do need more innovation within the current account world.
Yes.
And when someone finds a way of making money from it, they will do it.
I wonder if one day the FCA will have the courage to ban them. Wow. They might, because I looked at there's a Dutch bank that Trudos, I may not be pronouncing that right. Do you know that one? Have you ever looked at that?
No, I don't.
It's a brilliant bank in the sense that they don't do any wholesale funding.
Okay.
So they don't do any wholesale borrowing. They're not interested in that. They only lend what they've got on deposit. Mm-hmm. So they've got no risk. They can't do a Northern Rock. They've got no exposure to that. And they will only give you an account if you're an ethical business.
Nice.
Now, you haven't got to be ethical in the sense of green, but you've got to be for the common good.
Yes.
It can't. They're not going to do gambling. They're not going to do tobacco, anything in pornography or the sex trade, and actually. But they charge for a current account.
Yep.
They're quite open to say, that, how can it be free? It isn't free. Everything costs money, so these are our set tariffs.
Yep.
And we haven't got anything remotely like that.
Well, the co-op works that way.
Well, yeah, it would have, but it's owned by American venture capitalists. The co-op had a 1% stake, which they sold a few weeks ago. And you think, actually, although they say they're still there, but you think, you wouldn't traditionally think of American venture capitalists as being ethical.
No, you wouldn't.
I might be being a bit harsh there.
Venture capitalists have their place. They do allow rapid growth, rapid expansion, but they want their pound of flesh for the privilege.
Yeah, no. As long as you know the contract you're getting involved in, then that's understandable.
So. Yeah, they expect hard work and big returns.
Yeah. No, that's as you say, that's the risk that we're in, isn't it?
Yeah.
So in terms of how do people get in touch with you, Henry, and if they wanted to find out more or indeed wanted to talk to you about their existing facilities or what they're doing already, what should they do?
My website's the first port of call, which is www.smefunding.uk. Okay. They're welcome to call me. My mobile's 07952 783 895, or they can email me, and my email is henry@smefunding.uk.
And I know you've also got a very prominent LinkedIn profile.
Yeah, I'm on LinkedIn. My name's Henry Audley Charles.
Yep.
Or they can look up SME Funding UK.
All right, find it in either way.
Yes.
From that viewpoint. And are you happy for people to contact you to talk through their existing facility or what they've got already, or just they got this inkling that they might want to do something?
Yep. Always happy to have a chat. If I can help out with some advice, always happy to do that. If a client needs finance, I'm happy to give them some options and to make it happen for them.
And you're not tied to any particular institution?
No, not at all.
You're independent?
Totally independent. I'm approved and authorised by the Financial Conduct Authority, so I'm a safe pair of hands, and I'll provide the right solution for the client for the right reasons.
That sounds great. Well, thanks very much for your time this morning, Henry. That's been really useful.
Thanks, Neil.
And my pleasure. And we'll keep talking, and we'll do more of these as different scenarios present themselves. Hope everybody's found that useful. We'll have the transcript of this podcast there as well, with Henry's details there, and have a look at the businessgrowthclub.net, and you can certainly see some more of the podcasts that we've got to follow.